bensound.com. bensound.com.
Good evening, everyone. This is Financial Literacy 101, and I'm your host today, Ross World. So today we're going to get into a stock forecast, not a stock pick, not a stock review, but a stock forecast. So you guys can kind of work through how I gather all the information, but we won't get really into details about that. Nonetheless, I'll give you my personal stock pick for tomorrow, meaning that you should be doing your research, looking through your analytical tools, as well as looking to buy tomorrow. Now, we're all going to do a review of the two stocks we did the other day, which is my two favorite stocks right now, Plug Power and also NEO. Good thing about Plug Power is that I remember that Robinhood was giving away Plug Power. And if anyone kept Plug Power, I don't know if Robinhood had any idea that Plug Power was going to do as good as it's doing. But if anybody would have kept Plug Power and multiply on their amount of shares, then they would pretty much be in the money. Okay, so let me share my screen really quickly because I want you guys to really look how good NEO and Plug Power are doing. Of course, you're going to have dives and declines in the market, but you want to look for that comeback. You want to look for that steady growth over the course of time. So today, NEO was up 6.78%. Okay, so let's look at the 1 month turnaround. Look at this. This is what I love to see. This is what I love to see. Again, let's go to 6 months. And again, we understand that NEO is still a company that's modeling after Tesla. And they have some hardships where they were borrowing a lot of money from different people, but they are still climbing. Tesla was in the same shoes. So it's imperative to understand that, okay? So let's look into this. Very quickly, we're not going to spend too much time on NEO because you know I can really beat NEO into you guys' head, but I will not do that today. But as we can tell, back in May 4th, NEO is around $3.34, and today it's $7.72. And again, today's appreciating in value was 6.78%. Okay, let's move on to Plug Power. Plug Power, look at this. They're doing absolutely phenomenal. They were up 2.75%, but we have to understand, look at this 6 months. So take, for instance, if you would have bought them back in January. Okay, January 2nd, they were worth $3.24. And as we know today, they're worth $8.21. Again, these are my two hot pick stocks. I absolutely love them, and I believe they will continue to grow, long as they don't do anything crazy, okay? That is what I'm talking about. So let's look into some stocks that you might have been eyeing, you might have been doing some research on, that I believe are not good picks. And I could be wrong. That is my disclaimer. Stock advice can either be really good or really bad or right in the middle. So let's go to Bed Bath & Beyond. Now, let's just speak very layman about Bed Bath & Beyond. It's a very expensive store that caters to a certain group of people. Like some people may go to Target, some people may go to Walmart to get their rugs and little knickknacks and little essential items that regular stores may not carry. But the Bed Bath & Beyond brand is very expensive to a lot of people, to a lot of Americans. And now during this time that people are still consumers, they're not spending as much money, but they're still spending money. Bed Bath & Beyond are only going to attract a certain group of people, a certain level of income group of people, people who have money, people who don't like cheap stuff, etc. Now, when I mean cheap, there's a difference. So the word frugal and cheap are two different things. So when I look at Walmart, you can buy things for cheap. When I look at Target, I look at things you can buy them for a frugal price. When I look at cheap, it means that it's not made very well. It's easily to tarnish, easily to break. Frugal means it's a good product, but at a lesser price. That is the way that I actually picture it. Who we have in the chat today? We have Clan Killer as well as David Merrill. And let's see what you guys are saying. It said Hymex stocks is on the raise. Okay. Thank you, David Merrill. I'm glad someone appreciates it. And Shopify went from $880 to $950. Can't wait till I sell it for $1,200 at least. Well, Clan Killer, when you sell it, go ahead and drop a little donation in the cash out below. Just kidding. No, I'm not kidding. But anyway, so he said bought mine at $2.30 Neo Power. Okay. So anyway, I don't believe Bed Bath & Beyond is a good buy right now. And quite frankly, looking forward, I don't believe Bed Bath & Beyond is a good buy unless they do something so innovative online. A lot of people, even myself, we buy a lot of things online, mainly Amazon, Wayfair. Wayfair is getting a lot of push. I bought some things off of Wayfair. I've never bought anything off of Wayfair, but they're offering a lot of furniture and things of that nature. So people are moving to more online shopping, especially as COVID-19 percentages and people and the volume of people who are contracting this disease and this virus is rising. More people are doing shopping online. A lot of people are not trying to get back out there because I believe that the news reported those 21 states have increased in the number of cases that have contracted COVID-19. So people will start putting their head back in the turtle shell. They will start to go back into their caves and pretty much shop online. So again, unless Bed Bath & Beyond does something totally innovative online and decrease some of their prices, I do not believe they will be profitable or doing well as far as their stock is concerned going forward. Okay, let's move right along. All right, now, Northern Oil and Gas. And if you're looking at some penny stocks, some stocks under $5 or stock under $1, I do not believe this is a good stock pick. I do not believe it. I went through some of their things, even though, let's look at their today return. They said after hours, they're up 1.31%. This stock, let's see, look at the course of a year. This is their year. They've been doing quite bad. And if you are following the economy, if you are following the market, a lot of Americans are being more green conscious than anything. More people are recycling. And if you notice, there are more Tesla and hybrid vehicles on the road. So America essentially is going to still take us maybe 20 to 40 years to move totally away from oil and gas. But gas companies are not doing so well. But granted, there are some gas companies that's doing well. If you want to invest in some commodities, let's compare. Here's some related stocks. Oasis Petroleum, they're down. Abrasives Petroleum, they're down. Whiting Petroleum, they're down. Denbury Petroleum, they're down. Continental Resources, they're up. Okay, they're up 8.28%. So again, there may be onesies and twosies out there that are doing well because maybe they deal in other markets that actually support their other businesses, okay? Their other extensions of what their main business is. That can actually help an organization when they have their hands in so many cookie jars. So you have to be very cognizant of how the world economy is moving as well, okay? As people of this world are getting more intelligent and we're trying to save the earth, so to speak, right? That's what a lot of the Democrats and conservatives were talking about as far as the Green New Deal. That means that companies are shifting a lot of their power to electricity and solar power. So you might want to start looking at, if you're dealing with Stash, they have a whole section on solar power. They have a whole stock on a whole a whole ETF on solar power. So those are the things that we have to pay attention to. Is not just the American economy, but the world economy, okay? So that way you can totally diversify your stock portfolio in order to get some gains, even in a down market. There's money to be made even in a down market. And when people refer to a down market, what they're saying is that the big hitters like the Dow Jones, S&P 500, as you see here, and the NASDAQ, okay, and the New York Stock Exchange, that means that majority of them are down. But today, the stock market did its best since 1987, I believe. So there was a lot of stocks that were really up, but that doesn't mean it's going to sustain, because again, COVID-19 cases have increased around the US. So people will start to stay at home more. And when people stay at home, they don't spend money. And when they don't spend money, shares and depreciation of stock values go down. So that is what we need to understand, ladies and gentlemen, okay? So after giving you what I don't believe are good picks, let me give you what I believe are good picks. This is one, Carrols Restaurant. Now you're like, well, people are not really going to the restaurants. But again, Carrols Restaurant had their hand in other different pots, okay? So let's look on Robinhood so I can really break this down just a little bit better for you. We're going to read what they are about. Carrols Restaurant Group owns and operates restaurants under the Burger King brand. It serves the flame broiled Whopper sandwich, hamburgers, chicken, and other specialty sandwiches, fries, salads, breakfast items, smoothies, frappes, and other snacks. Now, there's more information, and the headquarters out of Syracuse, and they've been founded in 1960. So as people still want to eat out, whether they're using DoorDash, and look out for the DoorDash IPO, and they use Grubhub and they use Postmates and all the other sorts of those gig economy jobs that people deliver food to your doorstep. You have to be cognizant that people are going to stop going to restaurants. They're closing down bars in California, and look out, other places may be closing down their bars. So as far as people eating out is concerned, as people actually start to conserve their resources and their financial currencies, then they will start to eat more stuff as fast food. Now, we understand that, I mean, me personally, fast food is horrible for you, but I understand. Every now and again, you know, I might eat some fries from McDonald's, which is not probably the best, but nonetheless, a lot of people, especially those with low-level incomes, those who may be hurting at this moment but still want to eat out, these are the places that they eat at. So do I believe Carrols is a good buy? Yes, especially as COVID-19 numbers begin to rise. Or not even that, they haven't begun, they have been rising, okay? They have been rising. So let's look at this really quickly. We're looking at their earnings, and as you can tell, they were doing quite bad, but now you start to see a turnaround. Like even today, let's look at today, they was up almost 2%. So let's look over the course of a year. Now, over the course of a year, you see they were up, and then as COVID-19 hit, until those businesses started to implement COVID-19 measures, it dropped right there. You see that peak, or you know, that decline essentially dropped right in the middle as COVID-19 hit, and then it's beginning to rise again. So I believe this is a stock that probably is a good investment. Okay, you know, I don't think that it would be a bad idea to drop maybe $100 or $200 within this stock. All right, what are your notes? I said, Ross, what's your opinion on F9 or 9F stocks? And then he also says, I was looking at Carroll a few days ago. Okay. So one of the subscribers here are talking about F9 or 9F stocks. Let's look into that. All right. See, there's no information dealing with those certain type of stocks. Even if I write, you know, there's no ticker on those type of stocks as well. So we're gonna have to give more information, to the subscribers when you're talking about that, because a lot of times we don't want to talk over the subscribers. Say that way they can get the information, invest their money well. But let's look into Himax really quickly. I was looking at that the other day. But again, here's a good stock. Let's quickly read over this. It says Himax Technologies, American Depository Shares, also called Himax, is a semiconductor solution provider dedicated to display imaging processing technologies. It operates through the driver integrated circuit and non-driver product segments. The company's products include display drivers, timing controllers, wafer level optics, video and display technology solutions, liquid crystals over silicon and silicone, complementary metal oxide semiconductors, imaging sensor, and so on and so forth. This company was founded in 2001. It has roughly 2,000 employees. All right, let's see if there's any analytical data that's on it. As you can tell, the beginning of the quarters from 2018, they were doing fairly good. It was on a slight decline. Now they're beginning to climb again. So you know what? I'm very interested in this stock. Today, they were up 27%. So I got a little money in reserves. I'm gonna buy one stock here. I think I can, no, I can't buy two. So I'll buy one stock. Here we go. This is what I don't like about Robinhood, guys. That's why I actually switched to WeBull. But I will say, when it comes to giving you guys information, Robinhood just has a plain platform that I can get you information quickly. But when it comes to investing, I actually still like WeBull just a little bit better. So I'll set a limit price. And we'll do that. And buy. Okay. Done and done. But again, my stock pick for today, for tomorrow, would be Carrols. And the ticker is TAST. That's Tango Alpha Sierra Tango, for you guys that don't know. So again, I believe that's a good stock looking forward as COVID-19 numbers rise. So ladies and gentlemen, I hope that this information found you well and that you will start to investing, because at the end of the day, what I like to say is, why not invest? Why not invest? Especially if you're working from home and you're still bringing money in. Why not invest $150 a month, $5 a day? I love the $5 a day narrative, because $5 a day, you spend more than $5 a day. And that doesn't mean that you spend $5 every day. That means when you go back and you go over your budget and you go over your expenses, that other than your bills, you have spent more than $150 on things other than the essential bills that you need to pay for your home. So there you have it, ladies and gentlemen. That is my stock forecast for tomorrow. Is Carrols Group. The ticker is TAST. Also, if you're not yet investing in NEO or Plug, I believe those are two great, excellent picks. They have been essentially rising in appreciation and value for the last 2 months. So if you have any questions, my email is in the description below. And if you like this video, please give it a thumbs up. If you're not a subscriber, please join the family where I give you stimulus updates, investment tips, and also saving tips. And I actually read your comments and respond. Learn money and be inspired. You guys stay safe. I'm out.